Hey everybody, this is Jim at SP500chart.com. It is Sunday afternoon, a little bit before 3 o'clock. We're going to go ahead and do the video now looking at the S&P, what happened the past week, what happened on Friday, and if anything we can do can make sense of this. Before we dig in, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws these lines on charts. Let's take a look. Starting off on a 30-minute chart. I had this line on the chart because it was drawn from the lows of the middle part of April to the low at near the end of April, and we dropped down underneath this line and then sort of back tested it. But now, I'll be honest with you that there's something about this line and this line right here that just look a little odd to my eye. I'm going to make both of those red. Tell you what, I'm going to make them both green. And part of what looks strange, there they are green now, part of what looks strange is just the fact that we get 1, 1, 1, 1, and then we don't get another touch on this top line. And that just looks a little odd. Now, I know that getting up to 1890 is a pretty significant accomplishment. But the fact that we are still going sideways and the bottom has not fallen out of this market, and it still looks like the S&P is willing to make repeated attempts, I'm going to do something. I'm going to ignore this low right here. And I'm going to shift this line to there. You'll see something right off the bat. The first thing you'll see is that now we have 2 touches on that line this week. So as opposed to just having this line going up at a really steep angle, this angle, yeah, I think in the greater context of things, it just makes a little more sense. You can see, for example, that it is roughly parallel to this line. It is roughly parallel to this line. And these lines are roughly parallel to the other ascending channels that we've seen in the S&P. So that's a small change that I'm making in the chart. Again, the net result of this is to give the S&P a little benefit of the doubt, because it has always responded to giving it the benefit of the doubt. And until it starts to go contrary to that idea, to that posture, then I think I just want to keep doing it. Again, our 1840, 1850 is still an important range. So the fact that we were underneath this red line, all that meant was, if we trusted that red line to be a solid indicator, all that means is we're coming back down to 1840, 1850. It's not like that hasn't happened before. It's happened 1, 2, 3, 4, 5 times before. So the end of the world would not be taking place if we were to come down there. And just the same, if we were to break this green line and come down there, same thing. All I'm doing is offering what may be, we'll see this week, if we stay above this line for the week beginning May 12th, then we will know this was the right move to make. Guys, the technical analysis is really as much art as it is science. So sometimes you just look at it and you get an intuitive feeling. You say, you know, of all the charts I've looked at, something doesn't look right here. And that's why I moved that line. You can see that we were in this kind of wide descending channel here that had these 2 big dips. We broke over that on Thursday, by the way. And by the way, for the sake of this video, I will put that red line back on just for a second because I do want to discuss what happened with regards to the markings that we had on the chart coming into this week. I think that's a fair way to do this. So let's move back out to a 10-minute chart. So we had this line on the chart. We had a nice bounce on that line on Monday, and I'll be honest with you, I was feeling really, really smart. That, wow, look at that. Nice big bounce right where it was supposed to. But then when we bounced back off of 1884, 1885, which we knew was going to be resistance, we started to sell back down again, and we just traveled straight through that line. Then we made another bottom, very similar to this bottom right here, you see. We made another bottom on Wednesday, came up a little bit off that, closed, I think we closed a little on the positive side on Wednesday. I'm just going from memory. Thursday we had a move up to close to 1890 that was met with resistance, and that was totally expected because we've been seeing resistance every time we get up there. Then on Friday we saw a little bit of additional weakness, but what appear to be signs of possibly another reversal. So if we take the action that took place Thursday, late Thursday, and throughout the day on Friday, we can interpret this a couple different ways. One way we can interpret it is to say maybe we're getting a little head and shoulders, inverted head and shoulders pattern here, similar to what we had here, similar to this one back here that really didn't pan out. This one almost panned out, not quite. Now, the other interpretation of this is we're setting up a bear flag. So if this is a bear flag, we'll know it on Monday, because the S&P will end up falling out of this bear flag, and in doing so, it will almost certainly take out our new green line. But if this green line doesn't get taken out and we rally instead, then this becomes effectively a neckline. So you can see why I've decided to move this red line off the chart, even though it clearly has some technical significance. It's just the fact that we pass through it so easily to the downside and so easily to the upside and then so easily again to the downside, even though we've got a few points here and here where it seems to make sense. I'm going to opt for a little bit different picture. Now, if we look at a 10-minute chart, you can see that we are now above that little rising, this little descending channel that we were looking at. I think that's kind of interesting, the fact that we are over this line. We broke over it, and then we came back down, and before we came through this green line to retest this low, we rallied at what was at that point kind of an unknown rallying point. So that's why this line is on the chart. I'm going to throw one more thing up here, and I feel obliged that for every new line I place on the chart, I probably ought to get rid of a few old features just to keep things cleaned up a bit. So I'm going to add one more. We're going to go with this. I'm going to draw this line over the high of May 2nd and the high of May 8th. If we are forming some kind of consolidation pattern that takes out this line here, and we close above that line, and even better, as I've said, if we close above 1900, then I like the chances going forward of seeing the mid 1900s, and I'm talking about something in the mid to upper 1950s. So guys, I think the week was okay. It really was much of the same. And for that reason, I had my little rant and my little whining session I did, I think, on Wednesday. But you know, it is hard to watch this. It is hard to sit through all this, trying to make sense of it, and realizing, you know, sometimes you just can't quite make it work. So, you know, wish that lined up. You know, maybe, yeah, we'll go with this line right here. I'm going to kill that one right there because our short-term line is as good an indication as anything else. So, there you have it. That's the video for the week ending May 9th, 2014. We are still in between 1840 and 1884. And I guess if there's any good news, we're hanging out more at the top of this range now than we were back here. You can see that most of the congestion back here was on the downside around 1840. Then we had this little wide swing above and then below. And now upon returning, we're hanging out a little bit more towards this top line. If we break out, then this will become a consolidation pattern, and I could easily see that move into the 1900s. But if we don't do that soon, then the risk is that we're building up some overhead up in this area. In other words, people are, if you will, are stocking their shelves with stock bought at fairly high prices. And if the market turns south on them, then having spent more time up around 1880, 1870s is could be creating a little bit more selling pressure if it breaks down to the downside. I'm still hoping that I was right in changing this line, and obviously if this line is now to be the working pattern, then it is a rising wedge. So I'm going to do a little, I'm going to extend this to the right. We'll use light green. And I'm going to extend this line to the right. You see what I'm doing there? I'm going to edit, choosing a color. I'm saying extend right. And now let's see where we have an apex just under 1950. So even if this works as a rising wedge, we still have some room to go, but we got to get up over 1885, 1884. And again, I just want to remind you, as far as I can tell and as far as anything I see in this chart, we still have the same basic operating patterns that we've had for quite a while. And we've got a number of patterns that say if we break up out of this range, then we should expect something up in the 1950s. And you know, this little rising wedge aside, 1957, 1958 still looks like a decent target if our break is to the upside. So guys, that's about it. You know, I wish I had a little bit more good news for you, but let's just keep our eyes on it this week. There, like I said, we had this dip, a little bit lower dip, and a little bit less dip. Maybe we're looking at it's some kind of inverted head and shoulders-ish pattern. And if so, that would point us to roughly 1910, 1908, something like that. So keep your fingers crossed. Eventually, we will get out of this range. I think earlier in the week I said I had extended that little gray area between 1840 and 1850 to the year 2023. Well, it kind of feels that way. Chances are, in 30 days, that's either an area we're hoping to get back to if it went to the downside, or it may be an area that we're looking to come back to as a buying opportunity if our move was to the upside. So guys, thanks for watching. Thank you for your support. Take care.